Hello everyone, welcome to this session. Today we'll be talking about three stocks that have absolutely zero debt, which means that they are entirely self-funded. Now, before we take a look at these stocks, I would like to give you a disclaimer that if a business has zero debt, that does not necessarily mean that it's a very good business and you should start investing your money into that particular stock. So, with that disclaimer, let us take a look at these three stocks. The first one is CDSL with a current market price of 1250. Now this is a depository which holds all our shares, all our mutual funds in an electronic format. And the way CDSL makes money is something that we'll discuss after taking a look at the revenue and the profits. If you take a look at the revenue was 187 in FY17, 284 in FY20, and there's a sudden jump from FY20 to FY21 from 284 to 400 crores. That's a 50% jump. If you look at the profit, the trend is the same, continuous year-on-year growth and a sudden jump from FY20 to FY21 from 106 crores to almost a 100% jump to 200 crores. Now, it's something that we should all think about. What's happened in the past 1 year that the business has suddenly shown so much of profits and revenue? For that, we need to understand how does CDSL makes its revenue. Now, whenever you sell any of your holdings, any of your stock holdings or any of your mutual fund holdings, CDSL makes revenue out of that. It charges you 13.5 rupees for every scrip that you hold, means for every stock that you hold, it charges you 13.5 rupees. Now, if people continue to transact more, which means they continue to buy and sell more, there'll be a higher revenue that CDSL will make. Now, what has happened in the past 1 year is there has been a 27% increase in the number of demat accounts from close to 4 crore demat accounts last year to around 5.2 crore demat accounts this year. Now, because of this, a large number of people have now flocked to the stock market. They've started investing in the market, and with that, there have been a higher number of buy and sell transactions. Now, as I've already told you, for every sell transaction, CDSL makes money, which means an increase in the number of demat accounts is translating to an increase in their revenue and in their profit, which is why CDSL is showing the kind of growth that it is in the past 1 year. Let us now take a look at their stock price. Again, the trend seems to be similar. 400 rupees in 2017, 200 in mid of 2018 and 700 in mid of 2020. The trend here is that the last 1 year, the business has grown substantially. That's also reflected in the stock price. And just so you know, the current market price is close to 1250, which just shows that for the past 1.5 year, the wealth of its investors has grown substantially. So this is the first stock which I am bullish on in the long term, because I feel that a lot of investors will continue to move to the stock market, continue putting money, and that will further drive the revenue and the profit of this business up. So my second stock is SBI Life Insurance, which provides insurance policies to all its customers. First, let us take a look at the revenue. From 30,000 crores in FY17, the revenue has jumped to 82,000 crores. And again, the growth has been there for the past 1 year, where the revenue has almost doubled from 44,000 to 82,000 CR. If you look at their profit, the profit is also increasing year on year, but the profit has not replicated the last year performance of revenue. It was 1422 last year, and for this year is 1455 crores. Now let us understand why the revenue has gone up. There have been a higher number of policies. People are now realizing the importance of ensuring the lives of their young ones. Unfortunately, that's happened because of COVID. Now, with more number of people flocking towards insurance policies, the revenue will go up because more and more number of people are going to pay a premium to these insurance companies. With the increase in the amounts of the premium, the revenue is definitely going to go up. But now let us understand, why has the profit not gone up? and that is unfortunately because of COVID, because of a large number of death claims that people had to take because there were a lot of deaths in this period that was associated with COVID. Now, because people have been asking for claims from their insurance companies who already had a policy, the profits have dipped because the insurance company would have had to pay a lump sum amount to the insurance holder or to the family members. Now, because of an increase in claims, the profit has substantially dipped and has not replicated the performance of the revenue. Looking at the share price, it was 700 in 2017, 520 in 2019, 950 in mid of 2020. Current market price is close to 1000 rupees for this stock. In the long term, I feel that if the interest in insurance policies continue, then that is going to augur really well for SBI Life Insurance. And at the end of the year, there's also a chance that LIC IPO might come up. Now, LIC is the biggest insurance player in the market, much bigger than SBI or an HDFC Bank or any other insurance player. With that coming up, SBI Life will also be benefiting because an interest in LIC will automatically transfer to an increase in the interest in SBI Life stock. So the third stock that we'll be talking about is IRCTC. First, let us take a look at the historical performance. Continuous year-on-year growth in revenue, but FY21 suddenly saw a huge dip because of imposition of COVID-related lockdowns, and the same trend is for profit. Year-on-year growth till FY20, and the profit suddenly collapsed in FY21. But the reason that I am looking at IRCTC in a bullish sense is because it's a monopoly. There is no other private player in the market that's responsible for booking your tickets, booking your railway tickets. It enjoys 100% market share, and given that new trains, new routes are going to come up, IRCTC is only going to profit from there. So IRCTC's share, if we take a look at 900 in 2019, 1900 close to mid of 2019, and currently it's at 2700 odd levels. Now, because it's a monopoly, the price has shown a huge increase. Also, IRCTC's management has announced a stock split, which means for every one share that you hold, you're going to get 5. That one share will be converted into 5 shares by dividing the share price by 5. So the 2700 rupees stock will eventually turn to 540 rupees, and that is happening because the management wants to increase the liquidity in the stock. Now, you tell me, as an investor, would you want to invest in a stock that's 2700 or 500? It's obviously going to be the latter, and that is why the stock split has been announced. Now, if you look at the major businesses, catering business, ticketing business, even tourism, even packaged water bottles, entire business segments of IRCTCs, they are continuing their monopoly in all these segments, and it's going to be extremely profitable for them in the long run. So these are the 3 stocks that we'll discuss today: CDSL, SBI Life Insurance, and IRCTC. The good thing about them is that they do not have any debt, which means they do not need any financing from outside to run their business. And given the current market scenario, I think that they are likely to show a great growth in the years to come. Alright, that's it from my end. Thanks for watching the video. For more of such quality content, please subscribe the channel. Thank you.